Hey guys, how's it going? It's Andy from Magoo Investing. Happy Wednesday. When I went to bed last night, I was just kind of thinking before I actually fell asleep, and I was like, I have no idea what I'm going to talk about on Wednesday. And I had some ideas because the GE Investor Day was today, and so I was like, oh, maybe they'll release some great news, raise their forecast or something, and the stock will skyrocket. And I'll be like, yes, my favorite stock skyrocketed. So I woke up this morning and it was quite the opposite. I had some messages on my Discord asking about my thoughts on what happened. And I looked at the stock and it was down like 5%. And so GE announced some things that just from the headlines, I was considering selling my position. And so this is a great example of anytime you see a headline for a stock that you're invested in, I think it's important to look past just the initial headline and read into what's actually going on, because when I saw these headlines, I thought about selling out of my largest and actually my favorite stock to buy of 2021. I've made plenty of videos talking about why I loved it overall, and just these couple headlines and the 5% drop, which compared to how much it's moved over the past couple months, not that significant, but seeing those headlines and the negative reaction to it, I thought about selling out this morning. But today's video, I'm going to be talking about three main takeaways that I came from the Investor Day. Part one, I'm going to be talking about the news of the business that they sold off. This was the thing that made me kind of upset the first time I saw it, and I texted my dad saying, what the hell is GE doing? And then part two, I'm going to be talking about a not so discussed part of the Investor Day that is actually the reason why I'm kind of upset with GE overall. And then part three, I'm going to tell you about my overall thoughts on GE and talk about the decision that I made that was either buying or selling. So be sure to stay towards the end of the video for that. Also, if you've been enjoying these videos, I really appreciate it. Hit that like and subscribe button, as it would help my channel out a lot. So when I saw the news this morning, my first reaction was, what the heck is GE doing? You sold off your most profitable part of your business. And it was one of the main bull cases that I've had for GE for the past couple months. Is the aviation business really struggled in 2020, as you can expect with the pandemic, really hindering a lot of these airlines from buying planes. And since they are a company that sells a lot of the engines that go along with the Boeing planes, they've been hurting for a while. And so GE confirmed a deal with AerCap for $30 billion. That was rumored at the beginning of this week. So which business did they sell off? And so when I first looked at the report, I thought it was the aviation business. Turns out it's not. They sold GECAS, which stands for General Electric Capital Aviation Services, which is part of the business that leases out jets to commercial airlines. And so this is not the actual aviation business. In the past year, they had revenue of almost $4 billion from it, but had a loss of almost $800 million total. This is a part of their business that was important when it came to revenue, but it's not actually as big as I thought it was. When I put up these segments of their business, this is part of the GE Capital business, and this is an area that the company has been trying to sell off pretty much since the financial crisis of 2008. And so seeing this being sold off, not actually as bad as I originally thought. So when I put up that graphic again, they sold off the GECAS from the capital business, which is at the very bottom of the segments that produce revenue, and not the aviation business that's at the top with the $22 billion in revenue. GE Capital has been a part of the business that they've been trying to sell off for years at this point. At one point, GE Capital had $600 billion in assets in the late 2000s. And then you had the financial crisis, and that really hurt the company going forward. And it got to the point where they needed a bailout. And when I saw bailout, I was like, oh, it's probably from the government. And when I tried looking for it, interestingly enough, it came from Warren Buffett and Berkshire Hathaway and not from the actual government. So Berkshire Hathaway injected $3 billion back in 2008 to try to help the business make it through that tough time. And since that point, the company has really been struggling with debt and trying to sell off this GE Capital business. So now that I've talked about what they sold off, let's talk about some of the details about the actual deal. So it is for a total $30 billion, but the part of the deal that really interests me is what they're going to be doing with this cash. From the deal, GE is going to get $24 billion in cash and 46% ownership of the combined company. This cash will be used to pay off some of the massive amounts of debt that they've had in the past. And this has been one of the main bear cases against the company for the past couple years, is they've had extreme levels of debt. When I put up the historic chart for long-term debt, you can see how high it was in the early 2010s and how it's been slowly tapering off for the past couple years. And since CEO Larry Culp took over, the company has slashed around $28 billion in long-term debt in the past 2 years. And this will be an additional $24 billion to pay off debt, which I think is actually a step in the right direction. Part of the debt problems comes from the $22.4 billion in underfunded pension liabilities. This has been something that I haven't really discussed as much on this channel because yes, it is an important part of the long-term potential of the company, but it's not really something that I fully understand. And the idea of having a pension, the stuff that I can see is that they've paid the responsibilities that they have towards their pension through 2023, but they still have a lot of debt that they need to pay off. So there's gonna be a number that I'm gonna be curious to see what happens with it, with this $24 billion in debt, to see where this money is actually going, if it's going towards that pension debt that has been weighing down the company for a long time at this point. And so this is not the first business that they've sold off in the past couple years. For people that have been around this channel for a long time, I talked about GE back in, I think it was like December of 2018. So there's not that many of you that were around at that point, but I was not a fan of GE at that point. And the main bear case that I had towards the company is I thought that they were involved in too many different businesses that they weren't very good at. I always talk about Microsoft as being the perfect balance of a company. They have three fingers of their business that each make up 1/3 of their revenue overall. So if one of them has a tough quarter, especially like what we've been seeing during the pandemic, the other fingers of their business can make up for the loss in revenue. And so I thought GE had too many parts of their business that they were exposed in too many areas that were not actually doing very well. They sold off their lighting business, they sold their stake in the oil giant Baker Hughes, and they sold their healthcare division for $21 billion this past summer. And those selling off of these divisions was actually the main reason why I decided to get into GE for a long-term investment, because it's not great to see a company sell off businesses. Obviously, you want to be involved with companies that are expanding going into the future, but for a company like GE that's been around for such a long time, and since they've been hemorrhaging cash for the past decade at this point, seeing them cut off some of their businesses that weren't doing as well makes me feel very bullish on them for long term. Sometimes you need to cut back to rebuild stronger. And so that is one of the main reasons why I decided to buy in, because they've been selling off businesses that weren't doing as hot. And so when I first saw this headline, I thought it was their aviation business and I was very upset about it. But now that I'm looking at it, I think GE is in a much better spot. I think this deal is actually very beneficial to the company to be able to pay off long-term debt and still have a 46% stake in the company. So while it looks bad on the surface, I think this deal is actually great for GE and makes me feel even more bullish on them for the long term. But let's talk about the part of the news report that I am not happy with at all. During Investor Day today, the company recommended going through a reverse stock split. For people that don't know, a reverse stock split is basically you are removing the amount of shares available, and that's going to push up the value of each of the shares. Does this change the overall valuation of the company? No. The reason behind it is that they wanted to have their outstanding shares be similar to companies that had similar market caps. One of the examples that they used was that Lowe's has a market cap of $121 billion and 734 million shares, while GE currently has a market cap slightly above that at $102 billion, but they have 8.8 billion shares total. So they have significantly more shares than companies that are at a similar size. And so this stock split that they've recommended would multiply the stock price by 8 and reduce the number of shares by an eighth and bring it down to around 1.1 billion. Does this change the valuation of the company? No, but it does make the stock less accessible to people like me. I've been very vocal on this channel that the stock market is the most accessible that it's ever been. You have the ability to trade without commissions, which makes the smaller portfolios able to buy and sell without having to worry about the financial hit of paying the $5 to $6 a commission for every trade that you make. You have fractional shares, so now people are able to buy into any company that they want, and you don't have to worry about being able to pay for a full share of Amazon, the thousands of dollars that required just a couple years ago. But the one area of the stock market that has not improved with its accessibility has to do with options. For someone like myself that uses a wheel strategy, the first part of the wheel strategy is a cash secured put. A cash secured part of it means that you need to have enough funds in your account to be able to buy 100 shares of the given company if the price of the stock falls below the strike price by the expiration date. And so that's why GE was one of the main companies that I've been using the wheel strategy for the past 6 months at this point. For the longest time, I was trading between $9 and $11, and now it is a little higher. But having the price of the stock go up by 8 times means it's going to put it out of my price range, because currently it's sitting at $13 and I do not have $10,000 sitting around to be able to use the wheel strategy for a company like this. Even if I did have a portfolio that was worth $10,000, I wouldn't feel comfortable having all of my money tied up in a company like this. So right now, GE is the largest part of my portfolio, but it's only 25% of my overall portfolio, and I can still have exposure to other areas and other companies that I really love. And with this price increase, it's really going to price out some of these smaller investors. And so this is something that's going to be voted on by shareholders. And if it does go through, it will go into effect in May. And so I'm personally going to be voting no on this because I think that this will price myself out and it'll make it so I'm not going to be as bullish overall. I love GE not only because of the company, the recovery part of it, but also because I can use the wheel strategy effectively on a company like this. And getting rid of that removes one of the bull cases for me. And so if this goes through, I'm still going to be bullish on the company long term, and I'm still going to own my shares, but it's going to really limit the size of my positions that I'm going to be able to take because I won't be able to use the wheel strategy to bring in reliable income. So I will be voting no when that time comes. And so that makes me a little more bearish overall if that goes through. So overall, I don't think that the news from the sale of the aviation loan business is that big of a deal. I think it's actually very good for the company in the long term to be able to pay off long-term debt and still have the 46% ownership of that company. And so instead of freaking out when my favorite stock drops 5%, I did actually the opposite. I bought more shares. And so I always think that that's an interesting thing to consider whenever your favorite stock drops. You need to look at the news reports and see why did the stock fall and does your sentiment towards the company change that justifies this drop in price. And so at first I was pretty upset. I debated selling all my shares. And then I actually read into it, and I thought it was actually a very good thing for the company long term. And so I saw this as being a discount for my favorite stock. So I did add to my position. And funny enough, it is a technical trade. Would I have bought in if it wasn't a technical trade? Probably. But funny enough, it fell down to around $13, which is where I bought in this morning. That is a zone that I've drawn out on the charts. And when I put up the 180-day chart, you might be wondering, like, where did you get that zone from? But you have to go further back. And this is an area that has been respected from the top and the bottom multiple times since 2018. This was a pre-pandemic high, and then I touched it multiple times in 2018. So this is an area that has been respected by GE for the longest time, and so that's why I decided to buy in. I love adding to my favorite positions whenever the stock falls, and GE's been on a tear, not compared to something like a GameStop that's up like hundreds of percent in a couple days, but GE is a slow and steady stock, and it has been climbing in price rapidly over the past couple months. And so being able to add to my position on a discount, I thought was a very beneficial thing. So let me know what you thought about this news about GE overall. And do you think this is a benefit to the company in the long term like I do? Or do you think it's a transaction that's going to hurt them for the long term? Let me know in the comment section down below. Thanks for watching this video. I appreciate all support, and I will see you in the next video.